Hello. Hi guys. Good evening. Naveen, Pratyusha, Navyanka, Ajay Chandra, Shailaja, Banu, Etam Shetty, Shubham, Abhiram, सिद्धेश, अंशुमन. आज लाइव होगा क्या? मैं लाइव बैठा हूँ भाई, आज हो रहा है. थोड़ी टेक्निकल प्रॉब्लम थी उधर. 27th and all it says ignore. Hello guys, Damodar Shetty, sorry Damodar Reddy, Gagan, Abita, again Gagan, Rangesh, Bharti, Hemant. I'm fine Gagan, thank you. How are you doing? Okay, it's again raining crazy in Bangalore. Suddenly it starts, suddenly it stops. Okay, sorry. Alright guys, so let's start off today's discussion. Today's discussion is on loans to directors concept. Right? Let's see. So yesterday we did an integrated MCQ, but before that we'll just do an integrated MCQ. Yesterday we did one, if you remember, so we'll continue with that only now. Yesterday we did RTP 2020 integrated MCQ. So today let us do one more integrated MCQ. This is the May 2020 test series released by ICI, MTP released, alright. Let's see. So what did we see here? Yesterday we learned a trick that we should always read the questions first before reading the main paragraph. Let's do the same thing. So if you see, this is the May 2020 mock test paper. From the July exam, supposed to be July anyway. Now July exam, they will give you integrated case study. So there will be a case, looks complicated, but then the questions will be simple, nothing to worry. Okay, so let's see guys. Let's forget all these things. Let's directly go to the question, just to understand what all are there. Okay. So first, after the appointment of O15, what is this O15 and all? Basically, they have now named the directors A, B, C, D and all that. So basically, one person has been appointed. Generally, that's how we should understand. So after the appointment of O15 as additional director, so additional director means they have asked about 161(1). Another board meeting of SCL was held on 17th May. From the given points, choose the correct answer which indicates the quorum. So basically they are asking about the quorum, that is section 174. Then for the purpose of meeting the audit committee of SCL, how many members should be present at such meeting in order to constitute the quorum? In order to constitute the quorum. Again they are asking a question on quorum, 174, and this is quorum of what? Audit committee they are asking. Quorum of audit committee. This is not 174 of board meeting, quorum of audit committee they are asking. Okay, next. Next. From the case scenario, it is observed that after the death of M13, her daughter N14 was appointed at a board meeting to fill the vacancy of woman director. So they have asked a question on woman director and the vacancy. Is the appointment of N14 on 9 January justified, is what they are asking. Let's see. So basically they are asking about casual vacancy of woman director. Casual vacancy of woman director. Okay, that's the thing. Then in the above case scenario, L12 is the managing director of SCL. It is assumed that there is no managing or whole-time director, so then suddenly they have asked about MD remuneration policy and the percentage. Very simple. So let's see what exactly they want by seeing the questions. Okay. First, Messrs Sheetal Chemicals Limited SCL is a listed public company. Listed. The moment it is listed, independent directors mandatory, woman director mandatory, right? And all the other things. Your rotation, again if it says so, it's a public company. In petrochemicals which are used in numerous household like wax, detergent, carpeting and all that. As per the LABS, so always LABS is what we need to see. Latest audited balance sheet. Company shall have the following financial position. Paid up share capital 40, authorized 50, turnover of the previous year, that is 18-19, that is 300 crore. So the moment it is woman director is 100, 300. Woman director is 100, 300. Independent director, anyway, it's applicable listed company. Woman director, remember, anyway, listed company, no, 100, 300 also will not come. Sorry, my bad. Unlisted public company, 100, 300 will come. Listed company, definitely woman director is mandatory, correct? So even if it was unlisted company, 100, 300, because of which you have to appoint a woman director. That is one point of it. But since it is listed, friends, none of this will ever matter, honestly speaking. Composition of the board of directors was what? It was 13. A, B, C, D, E, F, G, like that, 13 directors, of which A, B, C, D, E are independent. These fellows are independent directors. These guys are independent directors. The articles of association of the company restrict the maximum number of directors to 15. So the maximum number of directors to 15, that we know. SCL remains over-conscious to corporate governance, ensures compliance in both letter and spirit. Okay, which means what we know that, independent director for listed companies should be 1/3 of total number of directors. So these fellows want to do one step ahead is what the indication is. So as of now, how many people are there? 13 directors. So 1/3 of 13 will be some 5 people. Anyway, 5 are already there. A, B, C, D already there, already covered. But they say they want to ensure ever conscience to corporate governance, means independent director they always will follow. That's the objective of the company. L12 is the MD. This fellow is the MD. Okay. Whereas M13 is the only woman director. Definitely you need a woman director. So M13 is a woman director. Now friends, one additional point you already know. As of May 2019, as on April 1st, 2019, you should have one woman director, but that woman director should be independent or not. Check this. Yes, as on April 1st, 2019, you need one woman independent director. I am just saying this is not given in the question, but that's an observation that we need to make. Why? M13 is a woman director, but is she a woman independent director? No. See, this may not be related to the question at all, but tomorrow they can ask you one question. Is this, have they followed the law properly? Answer is no. Why? Because I have A, B, C, D, E independent directors who are not women. Because why? They have given here M13 is the only woman director. But don't you think so? M13 should have been an independent, woman director and an independent director? Yes. That is for the future, not now. See, now if they can ask you in July one question saying that have they contravened any provision of law? Obviously yes. If they are ever conscious to corporate governance and all that, they have definitely followed, not followed the woman director concept. This is not given in the question, friends, but tomorrow they can add one more question. Have they followed woman director provisions? Yes, no. Answer is no. Woman director is there, but is she woman independent director? No. Have they followed Companies Act? Yes. Have they followed SEBI? No. So there is a violation of SEBI regulations. Is like that you should answer, right? Snehal, can you share Telegram channel? Kindly see the description. Everything is there in that description. You see everything is there. Later you see, right? Anshuman, please start the class, sir. I'm very much crazy. Okay, you asked that time. Okay, I'm started, man. Started. I am also very excited, right? Next. So all these things are done. The company has constituted requisite committees as per the requirements. What committee? Audit committee. When you say listed company, audit committee also will come. Nomination remuneration committee, then stakeholder relationship committee, all that is there. The audit committee consists of 7 directors as members. A, B, C, D will be there for sure. Then I, J, K is what they say. Earlier for the financial year ended 31st March 18, company successfully convened and held the AGM on 25th September 18 at registered office at Pune. On the fateful day, while returning to Mumbai from Pune by road after the reappointment, full and sad story will come. A fatal accident claimed the life of M13. Oh, this madam unfortunately passed away, thus snatching away an efficient and trustworthy director. All story. Cry and ignore. Later on a board meeting now this is important because your casual vacancy of woman director, when should you fill? In the next board meeting or 3 months, whichever is earlier, later. Whichever is later. That's the thing. So if you remember in the question they had asked something on that, so you need to, it should strike you. So first read the question and then see, it should immediately strike you. Then you will know this is the story anyway. as well on 9th January 2019, and N14, a finance professional and daughter of deceased. Oh, the daughter only they have appointed as woman director. Don't tell sir is daughter woman director and all. Don't ask guys. Like one person asked me that day, no sir is woman director a lady director and all. Please don't ask. Sir is daughter a woman director? Yes, yes, yes. Okay. So a finance, it's like telling both my female daughters are very naughty. Like that, don't tell. Finance professional and daughter of deceased woman director M13 was appointed as a director to fill the vacancy so created with the death of M13. Okay, it may be noted that before 9th January, board meeting was also held on 15 September. So basically, the 25th September is there now. 15 September it was already held. So next board meeting they are holding it on 9th January. Anyway, from the date of whatever vacancy, 3 months or next board meeting, whichever is later, is what we need to see. Right? Next. SCL is a growing company which wants to diversify its business into the sphere of agrochemicals also, and therefore desires to bring on its board O15, who is a chemical engineer with hands-on experience of about 20 years. All story they have given. Besides production is well versed with marketing, story. Ignore. This is important. Accordingly, a board meeting was held on 14th April 29 to appoint O15. So additional director under 161(1) was appointed on 14th April 2019, O15 fellow. As the total strength was well within the limit prescribed by articles, there was no need to alter the article. That we know. How many fellows are there? Total is 15, but we already have 13. 13 plus 1. 13 minus 1, that M13. For M, that other lady came, N14. And then this fellow came, O15. Okay, that's the thing. Simple. What is there now? Come on, tell me. After the appointment of O15 as additional director, another board meeting of SCL was held on 17 May. What is the quorum? Quorum provisions as per section 174. Quorum provisions as per section 174 would be 1/3 of total strength or 2 directors, whichever is higher. 1/3 of total strength or 2 directors, whichever is higher. Correct? So what is 1/3 of total strength? 1/3 of 14. So 1/3 of 14 or 3 is how much? How much does it come up to? 1/3 of 14 or what is it? What am I seeing? Sorry. Where am I? Oh, here. Sorry. 1/3 of 14. Correct? No, 1/3 of 14 or 2, whichever is higher. So this will come up to 4 point something. So that minimum should be 4 point something, which means I have to round it up to the next number. So it should be 5. 5 or 2, whichever is higher. So what is the answer? 5. So here answer is 5. 5 directors. That's all I need to look at. 4.66, no? So it comes up to 5. Next, for the purpose of audit committee, how many members should be present at the meeting in order to constitute the quorum? So as you know, audit committee and all, how many fellows should come, guys? Audit committee. How many members should be present? What is the answer for 2? Tell me. Answer for 2. I am waiting. Answer for 2 is what? Answer for 2. Is what? 3 directors or 5 members? In order to constitute the quorum. See, they are asking not how many members should be there. They are asking the quorum. What is the quorum? How many people are there, friends? You see, there are 5 fellows, no? Sorry, 7 directors. 7 directors. 7. 7, that is into 1/3. That is 2 point something. So 3 members. 3 members should form the quorum, out of which 2 should be independent. If you see the SEBI guidelines, it says majority must be independent in that. So answer is 3. They are not asking how many people are there in the, how many should be the quorum of the something else. They are only asking quorum of the audit committee. So quorum of the audit committee is as per 174, because 174 applies to the board of directors meeting and any committee meetings as well. If you see, even 175 also tells the same thing. Correct? Majority should form the quorum. So that is the same thing. Yes, answer C. Next. Now comes the CV of a woman director. From the case scenario, it is observed that after the death of M13, a daughter N14 was appointed. We know that, held on 9th January 2019 to fill the casual vacancy of woman director. Is the appointment of N14 justified? Answer. It should have been made within how many months? 3 months. 3 months or the next board meeting, whichever is later. So when did she die? When did she die? 25th September. 25th September to October to November, November to December. So 25th December or 9th January, whichever is later. So is it valid? All the answers say no. Only this says yes. So 100% it is justified. Option D. Option D. Option D. So let's see the institute answers, what they say. I am sure it will be correct only, because we are going line by line. Let's see. Oh, first question only, no? Okay, yeah. See, first one, B is correct, C, D. B, C and D are correct. So yeah, same. If you go to logic, why won't the answer be correct? You go by the logic. Correct? Next. In the above case scenario, L12 is the managing director of SCL. It is assumed that there is no managing director or whole-time director. Then in such a situation, how much remuneration can the company pay? If there is a managing director already present, then they will, all the other directors will get 1%. Anyway, we will do it in the MD provisions, but I am just saying. But if there is, they have told what? Assume that there is no managing director. If there is no managing director, then all directors will get 3%. So answer is C. That's it. What is there in this, guys? 8 marks in your pocket. Understood? Very, very simple. That's how we need to write the integrated MCQs. Alright? Done. Integrated MCQs, aram se you should write like that, no problem. Now let's go to very, very important area, friends. Let us go to now the 184, 185 and all those things. Quickly. Yes. Naveen says, who are those 7 directors? So 7 directors are independent directors. They are given in the question below. See the question there. They were given clearly who are they. They are independent directors. Alright guys, so let's come to a very, very, very important area of loans to directors. One question guaranteed without a doubt, and people ignore this particular section thinking it's very difficult and all that. So you need to understand that it is not difficult. You need to ensure that you study this clearly. So please do not ignore this particular provision. It is very, very important. Around last 3-4 attempts, many at least 8 marks they are asking. And once or twice they have asked 16 to 22 marks. Yes, I am not kidding. 16 to 22 marks they have asked. Ajay, woman director chart is already there in the first or second day. Check it out. You can take a snap from there. Yes. So 166(4) and 5 of the Companies Act. Let's see. So 166(4) says the company should not have any, the director should not have any conflict of interest. And 166(5) says that the director should not have any undue gain, directly or indirectly, from the company. So basically, if I am a director of the company and if I am a director of one more company, those two companies, if they enter into a contract, obviously I will have conflict of interest. But here the section is telling, try not to have any conflict of interest. Fair enough. But I cannot avoid it. Conflict of interest will be there. For that we have a group of sections to protect. That is 184, disclosure of directors' interest, 185, loans to directors, 186 intercorporate loans and investments, and 188 is related party transactions. So this is how you need to see. And where will the disclosure come? One disclosure will come in the board report under 134 3G and 3H. Second, there will be a disclosure in the financial statements, and lastly it will be there in the auditor's report. We will write it in Caro. So these are the three things that will come. While presenting the answer for integrated case study, are we required to explain the provision? No man, because now MCQs from November 19 have gone this thing. What do you say? You have to use the OMR sheet. Since it is the OMR sheet, the only tricky aspect there is you have to use some brains to answer. That's the reason why you just need to tick the answer. Unless they clearly give that please explain along with the answer also. In paper 6D, they say, write the correct answer along with the few lines justifying the answer. Paper 6D. So that time you have to write. Here it is not there unless they give. So whatever here also they have not given any explanation. They have only said tick the correct answer. So you need to read the answer, question, assimilate the answer, work, do the workings. We had to work. No, we just directly blindly didn't tell. Like yesterday we saw one special resolution question that was easy. Otherwise we don't have to read, it's not that directly when you see you will come to know. You need to do some workings. That's the reason why it's there. Okay. So that cleared your doubt, I think, Hemant. Right. Now coming to 185, guys. What does 185 say? 185 says public money instead of using for business, you could, earlier you could not give it to the director, but later they said that okay, you can give it to director under the old 295 section, but now they say that boss, it is prohibited. So let me just put the main thing here because there is no time to sit and do all these things. All these things, no time, guys. Okay. So now what is covered? Very simple. In 185, the structure I'll explain you. What are the companies covered? Both private and public. What are the companies covered? Both private and public. Correct? What all is covered? Now in this private and public, this is where loan giver, that is lender company. Lender company must be private or public. What all is covered? LGS, loan, guarantee, security and book debt. Loan, guarantee, security and book debt. Who all are covered? Directors are covered and interested parties are covered. Directors are covered and interested parties are covered. Directors and interested parties. Now, loan is something where you give cash or kind, but whatever you received should be in cash only. So I can give you my Activa and take money. That will be a loan. But I can't give money and take your Activa. That is not a loan. Guarantee and security. Guarantee is not supported by mortgage. Security is supported by mortgage. Book debt. It is not any other book debt. It is loan represented by book debt. Loan represented by book debt is what we need to understand. Alright. So to whom? One is to directors. Other one is what? To interested party. Private, public, loan, guarantee, security, book debt. To whom directors are covered and in what? Interested party. Very interested to know in that interesting party 185(1), it is prohibited. Earlier there was a full list where full was prohibited. Mind you, in 1956 everything was allowed. Then they added CG approval. In 2013 they said nothing will hold good, everything is prohibited. But in 2017, that came on 7th May 2018. Notification came later, but this is as per the Companies Amendment Act 2017. They said one part of this, that is called 185(1), that is prohibited. One more part, 185(2), they have restricted it. And one more, 185(3), they have told 185 is not applicable. So we need to understand who all are covered in 185(1), who all are covered in 185(2), and who all are covered in 185(3). I repeat, 185(1) is prohibited, 185(2) is restricted, 185(3) it is not applicable. The section is not applicable. In the exam, most important, I need to follow this. Before that, see, 185 is a complete prohibition. 186, friends, it involves intercorporate loans and advances, and also loans and advances given to a person. Any random person. Person means individual. So director also will become individual, no? Director also will become individual. So what to follow? Whether to follow 185 or 186 is a doubt. then one more doubt will arise, because in 186 now there are some restrictions. You can give a loan, but you have to pass board meeting resolution and special resolution. You can give a loan, but you have to pass BMR plus SR, board meeting resolution plus special resolution, if you cross some limits that we'll see later. But 179(3)(f), there is one more section 179(3)(f) where board can pass the resolution, board meeting resolution. It can be delegated to MD also. Means what? Managing director himself can give the loan. Now the question is, between these two we can safely say that the more restrictive section will apply. So this I can easily let go of. Basically, friends, harmonious construction is not possible. I cannot give effect to all the three. One is telling prohibited, 179(3) is telling allowed, and 186 is telling what? That you can go ahead and do it. So the thing is, what is allowed, what is not allowed? One second. I hope you are able to see. Right? Yes. Okay. So what I am trying to tell is, the thing is very simple. Whether between 186 and 179(3)(f, between 186 and 179(3)(f, we don't know what will happen, and now we know, because 179(3)(f is kind of liberal, so you have to scratch out 179(3)(f). Now the question is between 185 and 186. So what will apply? Obviously the more restrictive section 185 will apply to this. So if it is to a director, it is prohibited. Any other person other than director, 186 we need to follow. Correct? Yes, that is the scene. Harmonious construction. Okay. Can you see now, guys? There is some here there is full strength. I know there is buffering. I have not gone ahead, don't worry. I have not gone ahead. I am seeing this only, whatever it is. Says it's healthy now. I think now it's fine. Yeah. Looks fine to me. Okay, okay. I haven't gone ahead, don't worry. Guys, can you hear me now? Mic testing, mic testing, mic testing. Guys, can you hear me, guys? I can actually hear you. I can see now. I think it's fine. No, again it's buffering. No, again it's fine. Can you hear me, guys? Don't worry, I have not started. I have not started. Can you hear me now? I have not started anything. Don't worry, I was waiting for you. I have not started anything. Yes. Done na? Done, done, done. Are you, can you hear? Can you hear? Mic testing. 1, 2, 3, 1, 2, 3, 1, 2, 3. Yes. Think it's fine. Okay. Bangalore rain, guys. Can't help it. Crazy rains. Actually, it's raining like crazy outside. Cannot. Yeah, now I think it's fine. Alright, let's start. I'll start afresh. Don't worry. I'll start again. Don't worry. The objective was live streaming, right? So don't worry. That's why if you see, my class was till 31st, but I've taken one extra day. That was a reserve day for this only. I knew something like this may happen, so it's a reserve day. Yeah, now it was buffering, again it came. Right? Now it came. I saw. Please forward some rain to Chennai. Yeah, man, we have to forward everything there only. Anyway, water we have taken. You will not get water also. At least rain we will forward. No problem. Yes, now it's fine. Done. Chalo, we'll start. Bloody rain. Let it come, but then it should not disrupt this. It will break the flow. But what to do? Okay. Chalo guys, we'll start. So, coolly I'll explain, hear me out. Okay. Now it's not buffering, I think it's fine. Point number 1, coolly listen. 185 talks about prohibition of loans to directors. Correct? Too much Garmi in Delhi. Yeah man, Delhi is crazy. Full country heat, Bangalore is cool, always. That's why you always lose in IPL. We are always cool. Correct, no? Yes, 185 is what? Prohibition of loans to directors. 185 talks about prohibition of loans to directors, which means you cannot give loan. Cannot give loan. Next. Under 186, you can give loan. You can give loan. Under 186, you can give loan, no problem. Okay. But what restrictions are there? You have to pass board meeting resolution and special resolution. Under 185, prohibited. 186, you can give loan, but board meeting resolution plus special resolution. However, 179 3F, you can give a loan and you can also delegate it to the managing director. Also delegate it to the managing director. Delegate it to the managing director. Okay, I repeat. 185 cannot give loan. 186 can give loan. 179(3)(f you can give, but possible delegation to managing director. Now what to follow is the big question. Should I follow 185, 186 or 179(3)(f? So now I need to harmonize. Harmonious construction means giving effect to each provision. Tell me guys, is it possible by interpreting, is it possible to harmonize? On one part you are telling prohibited. On the middle part you are telling allowed with restrictions. Third part it is telling freely allowed. Can you harmonize these provisions? Never. So harmonious construction not possible. When harmonious construction not possible, I have to follow the more restrictive section of the two, 186 and 179(3)(f). Which is more restrictive? Obviously 186 is more restrictive. So this is gone. Because 179(3)(f) you can freely give loan, but 186 you can give loan only by a board meeting resolution and special resolution. Okay. Now on the other hand, between 185 and 186, between 185 and 186 what to do? Between 185 and 186 the question here is, 185 loans prohibited to directors, 186 loans allowed to person. Now will this person include director is a big question. So the answer is no. The main section which is more specific will override the general question. The restrictive section 185 and the more specific section 185 will override 186. So basically here 185 will override 186. Got it? So how will I interpret? This is very, very, very important. Now whatever I am going to tell in the exam, how to interpret. In the exam, how to interpret. You will see a question. Coolly see the question. One by one you need to answer. First, what you need to see? You need to see whether that person given in the question comes under 185(1). That person given in the question comes under 185(1). If it comes under 185(1), then prohibited. Then you see whether the person comes under 185(2). 185(2) there are restrictions but allowed. 185(2), in 185(2) it's allowed but with certain restrictions. Certain restrictions. Correct? So first is what? 185(1) prohibited. Then I'll go to 185(2) which is restricted. That also you need to go. Then 185(2) restriction means third you have to go. 185(3). 185(3) where section 185 is not applicable at all. 185 is not applicable means loan can be given. When 185(3) says not applicable, automatically it goes to 186. Automatically it goes to 186. So basically first is what? 185(1) prohibited. If it's prohibited, then prohibited, no tension. If it is not prohibited, then check for 185(2) listing. Check for this 185(2) listing. That also is not possible means go to 185(3). 185(3) is a place where it is not applicable. What is not applicable? The section itself is not applicable under 185(3), more like an exemption given to 185. Then also if it doesn't work, go to 186. 186 also if it's not applicable. For example, 186(11) if you see, there are certain companies and certain concepts where 185 is not applicable. In such a case, directly go to 179(3). You need to go to 179(3). This is the entire sequence. 185(1) prohibited, 185(2) restricted, 185(3) where it's not applicable, 186 and 179(3). This is what you need to follow in the exam. So very, very important. This is what you need to follow in the examination. Got it? So coolly see 185(1). Does it come under the list? Yes. Then leave it. Answer close. Okay. Does it come under the list? No. Then go to 185(2). Then 185(2) there are certain points. Does it come under that? No. Then go to 185(3). 185(3) also it says it's it comes under 186(11). Comes under 186(11). Then also no problem means go to 179(3). Ultimately in 179(3) what happens? You will pass a resolution, it can be delegated. This is the entire sequence to be followed in the exam. Got it? This is the sequence to be followed in the examination. Done. So with this basics in mind, let us move on to section 185. Right? Let's go to section 185. Now, who all are covered in 185? 185(1) is what I am just talking about now. to whom it is prohibited. Loan, guarantee, security, book debt. To who all is it prohibited? First, it is prohibited to director of the lending company or its holding company. Let's check this structure. X, Y, Z. Y is the company. This is the lending company. This is the company which I am actually checking for. You are the auditor of Y Limited. Y Limited has a holding company X, subsidiary company Z, right? And X has around 10 directors, Y has 5 directors, and Z has 2 directors. What is the lending company Y Limited? Now the question is very simple. Loan, guarantee, security and book debt. Loan, guarantee, security and book debt. Now, if it is given to, who all is covered? Is it 10 directors, 15 directors, 17 directors or just 5 directors? Very simple, it says director of the lending company or its holding company. Director of its lending company or holding company. So, I have to check for the loan, guarantee, security. Loan, guarantee, security of both what? The lending company and the holding company. Director of the lending company and holding company. If loan is given to 2 directors of Z Limited, 185 is not covered, but when I say cross, it means 185 is not covered. But loan can be given to them under section 186. You follow the formula, 185(1) prohibited, then prohibited. Not prohibited, 185(2). These fellows will not come in 185(2) also. Then go to 186, obviously. 185(3). 185(3) also these fellows will not come. Then I'll obviously have to go to 186. So I'm going to 186. Going to 186. Very, very simple. I'm going to 186. Got it? That's how I need to check, friends. Very, very simple. Why directors loan given to, what do you say, Z company's directors not covered? Because a subsidiary company director cannot have control over the holding company, obviously. But why is the loan given by lending company to X company directors covered as prohibition? Because the holding company directors can have control over the subsidiary company. That's the reason. Okay. So who all are covered, dear friends? 15 directors. 15 directors are covered. 15 directors are covered, right? So Y Limited, you have to go to both. So basically what? How many directors are covered? Loan given by Y Limited. Loan given by Y Limited to 15 directors, that is 10 plus 5 in this example, are prohibited. Yes, guys, I'm here. It's all fine now. I apologize. It's fine now, guys. I have not gone anywhere. Don't worry. There is a lot of rain here. Nothing can be done, honestly speaking. The speed is also very good, but I don't know what is happening because of the rain. I can actually hear the rain now. It's very, very crazy here. Now can you hear me? Shall we continue? Can we continue? I think it's coming now. I can see that there is no buffering here. Even here, thankfully it's coming. Yes. Yes, chalo guys, no choice. Lot of rain today, crazy. All right. So very simple. What loans are prohibited? I have not started anything more. I am seeing here constantly whether it's buffering or not. Don't worry. I have not gone ahead. So the thing is very simple. Y Limited giving loans to 15 directors. Y Limited giving loan to 15 directors is completely prohibited. But Y Limited giving loan to 2 directors of Z Limited is not prohibited because it is, that's the thing, very simple. So if you need more information about this section, you please go to my Advait channel, right? Go to the playlist. It's there in the description. Go to the Advait channel, go to the playlist. I have uploaded parties covered under 185. There is one video, parties covered under 185. Almost 1 hour I have explained this entire thing. Please go there, you will understand everything. Okay, don't worry. Now it's not buffering. Got it? So those who are finding it confusing, I think 2 people, Mohan and Arjun, please go there and check out the video. You will, parties covered under 185, everything is explained there. Yes, so now XYZ are the directors. First is director of the lending company and the holding company. Next, relative of such director. Now, relative of the director it says. So first of all, what do we see? We saw this now, Y Limited and the 5 directors of Y Limited and Y Limited giving loan to 10 directors of holding company. That is what we have seen. Now they are using one more term, relative. Mind you, for the entire example, who is the lending company? Y Limited. Y Limited is the lending company. So you need to understand that. Relative of the director. Relative of the director. Let's see. So Y Limited, so in my example, directors XYZ assume if they give loan guarantee security, if they give loan guarantee security to the relative of X, the relative of X, one of the directors, then it is completely prohibited. Relative of X, prohibited. Now, who is a relative? Who is a relative? This is the list. Person at the center, the spouse, brother, sister, father, mother, son and son's wife, daughter and daughter's husband. All these people are relatives. So person is covered, spouse, brother, sister, father, mother, son and son's wife, and daughter and daughter's husband. These are the people who are the relatives. Very, very simple. So basically the person is covered, of course, and only the spouse is covered. If you see, interestingly, brother's spouse and sister's spouse, brother's wife, sister's husband are not relatives. Your grandparents are not relatives. Grandchildren are also not relatives. But your son and your son's spouse would be the relative as per the definition of Companies Act. So stepfather, stepmother, stepbrother, stepsister covered, stepson covered, stepdaughter is not covered. That is an error of omission. Stepdaughter is not covered. Don't add stepspouse and all that. I know some of our chief ministers, RCB, CSK, chief ministers have 2 to 3, 3 and all that. Adjust, kindly adjust. For them, let them see when they have to see all this relative definition. For us, no tension, right? So person, spouse, brother, sister, mother, father, son and son's wife, daughter and daughter's husband. This is what we need to clearly understand. Okay. Yes. So cool. Then the brother, spouse, reverse relationships are not covered, friends. See, for example, from your point of view, your father-in-law is not a relative. None of the spouses side are covered, no? None of the spouses side are covered. Your father-in-law is not a relative. But from your father-in-law's point of view, you are a relative. From your point of view, father-in-law is not a relative. But from your father-in-law's point of view, you are a relative. Why? You will be the son or daughter's spouse. So you will be the son or daughter's spouse. That's why from your father-in-law's point of view, you are a relative. From your point of view, father-in-law is not a relative. Very simple. Got it? That is that. Relative of such director. 2 clause 77 read with the rules. So now, loan guarantee security. Loan guarantee security given by By whom? By the lending company Y Limited to the relative of such director. So if you just take this person to be the director, see the relationships 1, 2, 3, 4, 5, 6, 7, 8 and 9 spouse. Totally around 9 relationships. This can be plus or minus also. If the parents and all have cricket team 11, 12, nothing can be done. Then their children also 11 and all if they have, that's the problem. But this is the basic thing. It can be plus or minus. Okay. So in this example, 9 relationships are covered. So parents, brother, sister, son, son's wife, daughter, daughter's husband, all these things are covered. That's what we need to see. So 2 clause 77 read with the rules. Now, partner of such director. So what did we see here? First of all, first we saw director of the lending company and the holding company is one. Next is partner of the director. Now we are seeing relative of the director. Relative of the director. Bharti, it's not happening, man. From my side, it's fine, Bharti. I think your internet there is a problem. It is absolutely fine now. So please check your internet. Yes. Now moving on. Y Limited. Y Limited as directors X, Y, Z. Now I need to see partner. So director X has a firm XPJ with X, P and J as partners. Right? Director X has a firm with X, P, J as partners. Very, very simple. Now if this company Y Limited gives loan guarantee security to the partners P and J, partners of the director, then it is a problem. Then it will be prohibited. So what is prohibited? First of all, director giving loan to lending company or holding company. Second, relative of the director. Third one, partner of the director. These three things you have to remember. Can I give it to the firm, by the way? Can I give it to the firm? I will not give it to X anyway. X I cannot give. Now I am saying P and J also I cannot give. Can I give it to the firm? Can I give it to the firm? Firm XPJ, can I give it to? The answer is no, because for that we have the next point. For that we have the next point. So it cannot be given to the firm also. Let's see the next point. So you need to remember the first subject that you have in CA final. First subject is FR. So you need to remember FR. Why you need to remember FR? We'll see. Before that, friends, here first chart, if you remember, we said Y is the lending company. It has 5 directors and holding company X has 10 directors. So loan guarantee security given to 15 directors are prohibited. Then we saw the dialogue, partner of the director, relative of the director. Now the question is relative of 15 directors, partners of 15 directors, or is it the relative or partner of only 5 directors? What do you think? Very, very important. They have used the word relative of such director and partner of such director. So which director should I take? I should take both because of the use of the word such. It is a Supreme Court decision. So when the adjective such is precedes a noun, here the noun is director. So the meaning should be taken from the preceding sentence. So here such director means which director? Both 15 directors. So mind you, first list I have to obtain the name of the 15 directors. Second list I have to obtain those relatives of those 15 directors. Then I have to obtain a list of partners of those 15 directors. So many things I have to obtain. Loan given to any of these fellows, either 15 directors or all the relatives of those 15 directors or all the partners of those 15 directors would be prohibited. Very, very important section, would be prohibited. Correct. 135 relationships would be prohibited. Got it? Now next one would be what, friends? Partner or relative or director of which company, that we have seen. Next would be now FR. I told you, remember the term FR. A firm, for a firm, relative is also covered. A firm in which such director or relative is a partner. Director or relative is a partner. FR. A firm in which such director or relative is a partner. A firm in which the director or relative is a partner. Means what? Very simple. Y Limited is there. Same company Y Limited. Director X, he has a firm XPJ. In the previous slide we said XPJ are three different partners, and if the loan is given to P and J, it is prohibited, we have seen. Now we are seeing the firm itself. If the company gives loan, guarantee, security, book debt to firm XPJ, is it allowed or prohibited is the question. Now friends, till here now, till the first segment. Now this segment also we need to understand. First three were easy. I repeat, director of the lending company, those 5 directors, and directors of the holding company, those 10 directors. Then what did we see? Partner of the director. So of such director. So 15 directors into their partners. Then we saw relative of such director. So those 9 relationships into those 15. So 135 relationships. Now we are seeing FR, a firm in which director or relative is a partner. So if I give it to firm XPJ, it is prohibited. If I give it to P and J separately, that is also prohibited in the previous point. If I give it to director X, that is also prohibited in the previous to previous point. Now, director X has a relative, Mr. A. Mr. A has a firm ABC with A, B and C as partners. If I give it to relative Mr. A, only to this fellow if I give, that is prohibited, already covered. That is prohibited, already covered. If I give it to the firm now, firm, this is the firm FR, a firm in which such a director, means those 15 directors or their relatives is a partner. So in this example, director X and his relative Mr. A is a partner. So this firm if I give, this would be also prohibited. Now you may ask a question, sir, if I give a loan to B and C, who are B and C? Partners of relative of director. Partners of relative of director. Is it covered? No, law cannot provide for extreme circumstances. This is not prohibited. This would be allowed. However, it would be allowed with certain restrictions. What restrictions would that be? This will covered under 186. That's why always remember, first I have to see 185.1, then I have to move on to 185.2, then I have to move on to 185.3, and then I have to move on to 186. It is not covered in 185.1, and I am telling you this point is not covered in 185.2 and 3 also. That's why directly it has to go to 186. Correct? 186. Correct? So here loans to directors directly or indirectly. So that is what we need to see here. Got it? So these 4 points. Revise. Partner, the director is giving to that person, that is the lending company and the holding company, 5 plus 10, 15 directors. Second point, to the relative of the director. So 9 into 15, 135. Then the partners of such directors. Partners can be anybody, 15 into any partners. Then the firm, because these are all indirect loans. Directly I anyway cannot give. Indirectly also I cannot give. This is the meaning of indirect loans. So indirectly to whom? To the firm in which the FR, director or relative is a partner. FR, a firm in which director or relative is a partner. This is also prohibited. Got it? Done. After this, what happens? Now this ends 185.1. All these things are prohibited, done. All these things prohibited, done. Now next set would be 185.2. 185.2 actually covers only bodies corporate. Bodies corporate, and first point covers private company. Bodies corporate means something which has a separate legal entity, as simple as that. Just remember, anything that has a separate legal entity is called as a body corporate or a bodies corporate. Correct? So first is what? Private company. So here you have to remember, see FR you already remembered before. Here you have to remember, now we are all dying to travel. So all these days we were taking for granted. Before Corona we took for granted the concept of traveling and all that. But now we are craving to travel, right? So when I book a flight or when I book a train now, they will give me something called as a PNR number. So remember this code PNR. So for a private company, no relative. Means private company relative is not covered. Which means what? private company in which such director or relative is not there. Private company in which such a director or relative is not there. Private company in which such director is a director or member. Correct? Means what? Same, Y Limited as a director X. Director X is a member of J Private Limited and director X is also a director of P Private Limited. So what is this? A private company in which such a director is a member, a private company in which such director is a director. You cannot simplify easier, more than this. This is the most simplified form of understanding the provision. Correct? It's very, very easy. So follow this particular structure. Otherwise, it's going to be difficult. So if you see director X of J Private Limited, member, and director X here of what? P Private Limited, X is director. So LGS. So if Y Limited is giving loan guarantee security to J Private Limited in which X is a member, director X is giving a loan guarantee security to P Private Limited in which X is a director, then what will happen? It is allowed under 185 subsection 2. It is allowed but restricted. What are the restrictions? Three things, guys. One, special resolution has to be passed. Second one, proper explanation has to be given, explanatory statement as to why you are giving the loan to them. I told you 185 to only covers separate legal entities. So first I have to tell why are you giving to that entity. Entity that is this one, private limited and private limited, in which one fellow is the same guy is a director or a member. Second is explanatory statement. Explain each and everything why you are giving the loan to them, explanatory statement. Third one, it is what? Arjun says any logic for prohibiting member. They are not prohibiting here, it's allowed, it's restricted, no prohibition. Correct? So special resolution, explanatory statement. Third one is what? The loan amount should be used for the principal business activities. Loan amount should be used for principal business activities of what? Principal business activities of whom? Principal business activities of this particular thing. That is which one? This loan which is given to this particular company, that is P Private Limited and J Private Limited, it should be used for the principal business activities of these companies. These are the three restrictions. This amendment came in 2018, very, very important. This amendment came in 2015. That's why very, very important. Got it? So first is special resolution, second explanatory statement, third one principal business activities. These are the three things that we need to keep in mind. Now, on the other hand, you may ask, what about if director X has a relative, Mr. A, and A can have one company, R Private Limited, A can also have one more company, Q Private Limited, in which A is a member or in which A is a director, in which A is a member and in which A is a director. Now the question is, correct, you may ask me, what is the scene now then? In that case, can Y Limited give loan guarantee security? To whom? To Q Private Limited and R Private Limited. What is the answer? Answer is yes. Possible, but what should you do? You have to follow section 186 here, because 185(2) is not covered. PNR, remember PNR, a private company, no relative. So relative, anything related to relative is not covered. So that is the scene. So this completes which one, guys? Private company point, in which that director is a director or member. Private company point. Got it? Simple. So next is 2 again relates to body corporate. So we will see. So Y Limited, same company in my structure, if you remember XYZ, same company Y Limited. Y Limited is giving what? Loan guarantee security to a body corporate. Y Limited is giving loan guarantee security to a body corporate. And what do you mean by body corporate? We will see that. So, but in this body corporate, the directors of X Limited and Y Limited I repeat, Y Limited is giving loan guarantee security to the body corporate. And to this body corporate, the directors of X Limited and Y Limited put together are holding minimum 25% of the voting power. Minimum 25% of the voting power. So what do you mean by this body corporate? What is body corporate? Private company, public company, statutory corporation like LIC, UTI, yesterday we saw, separate act of parliament. Then foreign company, limited liability partnership, and then what else? You have nationalized banks or financial institutions. So basically, I repeat, Y Limited is giving loan guarantee security to a body corporate. Y Limited is giving loan guarantee security to a body corporate. And in this body corporate, who all are investing? X Limited and Y Limited's directors. Directors of X Limited and Y Limited are having minimum 25% of the voting rights. 25% of the voting rights. So in this certain cases, then is it prohibited or allowed? Allowed, but with certain restrictions. Condition number 1, special resolution. Condition number 2, explanatory statement. Condition number 3, principal business activities. Condition number 1, special resolution. Condition number 2, explanatory statement. Condition number 3, principal business activities. Clear? So this is the scene with respect to body corporate where minimum 25% voting power is held. This is the scene. Very simple. So one part is what? The private company, PNR, a private company in which the director is a director or member. There ends the matter. Now comes body corporate. Body corporate where minimum 25% of the voting power is held by, that is how much? 25% of the voting power is held by directors of both the company. Such director, that is lending and the holding. And next is what? Next is last part. A body corporate in which board of directors is accustomed to act. Means what? Y Limited has given loan guarantee security to this body corporate. Let us say Sonia Limited has given loan guarantee security to Manmohan Limited. All names linked to this particular slide is purely coincidental and the fiction of my, a figment of my imagination. Any resemblance to any living being is purely coincidental. This is the disclaimer that I am telling. So Sonia Limited is giving loan guarantee security to Manmohan Limited. Manmohan Limited can be what? Can be private, public and all those things. Now the directors of Sonia Limited, SG, RG, Parle-G, three fellows, right? So the directors of Sonia Limited now control Manmohan Limited, which means Manmohan Limited's directors are accustomed to act, means habituated, are accustomed to act according to the directions of the directors of Sonia Limited. Easy to understand. Correct? The directors of Manmohan Limited are accustomed to act according to, that means habituated by reason of habit. Accustomed to act, habituated by what? By the directors of Sonia Limited, SG, RG, Parle-G and all these three fellows. Correct? So that's the thing. So very simple. So basically one company is controlled by the other company. So these fellows are technically called as the shadow directors. These are called as the shadow directors. Very simple. Yes. You are saying true example, practical and all. I don't know. I am just randomly telling this example. I don't know whether it's practical and all. You decide. Okay. So it says what? Body corporate where this Manmohan Limited, where the directors of Manmohan Limited are accustomed to act according to the directors of Sonia Limited. Very, very simple. So that is what we have to see. Correct? Private, foreign company, public, LLP, all that. So basically, if there are shadow directors, so you run a company and there are few directors, but they are all dummy directors. You are the main director, correct? You are the prime director. He is not the prime director. You are the prime director. You are controlling the show, correct? You are the puppeteer, main guy. Those people are only the puppets. So then, if my company gives a loan to that puppets, then what happens? Same special resolution, principal business activity, and explanatory statement. 3 things we have to follow. Very, very simple. Correct? So these are the things that we need to keep in mind. So basically all these things. So this will apply to both private and public company. This is 185.2. Very, very simple. 185.1 prohibited, 185.2 allowed, but with certain restrictions. So in my entire sequence I have to go like that. So first I have to go to 185.1, which includes only people if you think about it. 185.1 includes actual individuals and one firm. Firm, there is no separate legal entity, correct? No. 185.2 actually talks about separate legal entity. One you have private company, then body corporate, body corporate. In 185.1 what did you see? First was the director, second was partner, third was relative, fourth was firm, FR. So 185.1 covers 4. Here 185.2 covers these bodies corporate. 185.3 is a totally different thing. We will see that in a while. So this is regarding that. Very simple. So this is 185.2. Now as far as guarantee is concerned, you have to remember this rule. First should be a company always. Company should give a guarantee. Second should always be guarantee or security. Second column should always be guarantee or security. Third column is IDC, means I don't care. In the examination, see 185 actually takes some 3.5 hours to explain in class. But now we don't have time, we have to wrap it up. So whatever is quickly in examination oriented study is what we are doing, correct? So if you see company giving guarantee or security to whom? To I don't care, I don't know. This IDC is now giving a loan. Most important is this, the fourth column must be a loan. First column should be a company. Examination when you are writing down, first item should be company, second item must be guarantee or security, third item I don't care, fourth item should be a loan. And fifth item should be a person, specified person, covered under 185. This can be 185.1 or this can be 185.2, doesn't matter. So if it is 185.1 it is prohibited, if it is 185.2 it is allowed. So a company, in my example Y Limited, is giving a guarantee. Guarantee is not supported by mortgage, security is supported by mortgage. Is giving a mortgage to a, let's say, bank. Third person is a bank, can be anybody. Bank is in turn giving loan to a director. So what does this director do? He was one chapper fellow, he didn't have money. So what did he do? He went to the bank and said, I want loan. Bank said, I will give you loan, boss, no problem, but you please go to your company and get me a guarantee. Correct? It's like your Nirav Modi's case. Nirav Modi wanted to have a deal with the supplier. So the supplier started supplying the money the jewels worth crores to Nirav Modi. But the suppliers wanted a guarantee. Who gave guarantee? Punjab National Bank. Same. Bank is now giving, this is slightly different example. Bank is giving loan to the director and Y Limited is giving guarantee to the bank. This obviously, the full structure, first it should be a company. Second it should be guarantee, which is there. Third one it should be a anybody. Third one it's immaterial, it can be an individual also. Fourth one it has to be a loan, most important loan. Lastly it should be either covered under 185.1 or covered in 185.2. This fellow is covered in 185.1, hence this transaction is prohibited. Correct? On the other hand, if this instead of director, if it had 185.2 list at PNR, private company point, or body corporate or Sonia Limited, all those things, then it was allowed. Then it would have been allowed. Okay. So this is the important thing that you have to keep in mind. This has to be a loan, in connection with a loan. It cannot be performance guarantee and all those things. It should be in connection with a loan. Very, very simple. Correct? So that's what you need to keep in mind. Next, the scope of guarantee, security, all that done. This and all we'll see later, don't have time. Yes, so most important friends, this is the amendment with respect to holding subsidiary relationship. This is important. Holding company giving a loan to wholly owned subsidiary exempt. Means what? Exempt under section 185. I need to check 186. 186 I need to check. It is exempt under 185 but need to check 186. Then holding company giving guarantee or security to anyone. That anyone giving loan to a wholly owned subsidiary is again exempt under 185 but I need to check 186. Under 185 though definitely exempt. Holding company giving guarantee or security to a bank or financial institution which has in turn given a loan to a subsidiary company. Holding company giving guarantee or security to a bank or financial institution which has in turn given a loan to a subsidiary. This is also exempt under 185 but I need to check 186. Mind you, the first two items is wholly owned subsidiary, this item is normal subsidiary. All three cases important. All three cases 185 is exempt. I need to check whether 186 is applicable or not. 185 is definitely exempt. 185 is definitely exempt. I need to check whether it is covered under 186 or not. 185 for sure. Correct? 185 for sure. 185 is exempt for sure. Alright. So this is the scene with respect to holding and all those things. So three things with respect to holding is what we need to see. Right. So this is regarding what, friends? This is regarding holding subsidiary relationship. All this is cannot be discussed here. Leave it. So this was 185. But barring that, there are other quick points in 185 which we will just quickly take a look. So in the exam, one thing that can come, like traveling advance or salary advance given to the employee. So very simple. So I am the director, right? Or you are the director. Your relative happens to be an employee of the company. The company is giving a loan, employee loan to that relative. Now is this prohibited? The question you have to ask is, just because that person is a relative, does it prohibit the company from giving a loan to that relative? Or what if I give the loan as an employee? So in the capacity of an employee is receiving the loan, what is the problem? So one very important case that you need to remember is this, MR electronic components. You need to quote this also in the exam, MR electronic components. Under MR electronic components limited, they very clearly mentioned that I have to see these things, whether the beneficiary is a bona fide employee, whether the advance falls in the general scheme of advances given by the company, whether the amount paid is proportionate or disproportionate to the salary, conditions for repayment like rate of interest and all that, and what is the capacity of the person receiving the advance. What is he? When he is receiving the advance, what is he? In what capacity is he receiving? Is he as an employee? Is he a dummy employee? All that I need to check. So in the end, just because he is a relative of the director, it should not prohibit the company from giving the advance, right? That is one part of it. Then one more question that they can ask would be this one. Let's say you are the what do you say, director of, let's say, Loda, your, let's say, Shobha Developers. Shobha Developers is a very big company. Loda Developers is also there. Prestige is also there. So many other. So let's say you are the director of Shobha Developers, right? You are the managing director or you are the normal director. They give you an offer now. 15 crore Shobha property. That is, an apartment where 3-floor apartment. They tell you please take it. But you pay 10 crore upfront. Remaining 5 crore I will recover from you from your salary. From your salary I will recover. So every day they will recover from your, every month they will recover from your salary as an EMI. Now for the company Shobha Developers, it is just a stock. It is not an asset. It's a stock. I mean, what I meant to say was it's not a fixed asset. It's a stock that they have to dispose of, that they have to sell. So now is that loan represented by book debt is the question. So basically in their books you are obviously a debtor. You have to pay now. You have already paid 10 crore, remaining 5 crore you have to pay. So now question is very simple, is it prohibited or not? So I have to see Dr. Freddy Adishar Mehta case law, which says that the transaction amounts to a credit sale. Now if this credit sale is a loan represented by book debt, then it may be prohibited. Otherwise it does not amount to even an indirect loan. So basically what they are trying to tell is, what is not a loan, you cannot convert it into a loan. That is the essence of this particular section. So if you see the quote, this was in Freddy Adishar Mehta, said that the word indirect cannot be read as converting what is not a loan into a loan. That's what they said. But you have to write one line here. If a loan is represented by a book debt, then it will definitely attract section 185. So it depends on the facts of the case. This at least 7 to 8 times they have asked in the exam, I am not joking. MR Electronics also at least some 5 to 6 times it has come. So these are the two most important case laws for the examination. Yes, 5 is are case laws important? These case laws are important, man. MR Electronics, Freddy Adishar Mehta, all that you need to remember without fail, right? These are the very important cases. So that is regarding 185. All this done. There are so many other points also, but because of lack of time we cannot discuss. Anyway, so coming to 186 now. 186. Let's see the breakup of section 186. 186 is divided into 2 points. 186.1 talks about the layers of investment companies. So one company can have maximum 2 layers of investment companies. That's what it talks about. So there are 2 things to it. One is 2 clause 87, where if it's a holding company can only have maximum 2 subsidiaries. Vertical integration, it should stop here. However, as per 186.1, if there is a holding company or normal company A and a company B, in between them there can be investment layer 1 and investment layer 2. Because here they say that one company cannot invest in the other company not more than through not more than 2 layers. Through not more than 2 layers. So basically you can have only 2 layers of investment companies. So one is this S1 and S2, a subsidiary relationship, and this again is a different discussion altogether, but now let us go to 186 subsection 2. 186 subsection 2. Suchet, are there any additional marks for quoting case laws? 100%. You will get additional marks for quoting case laws. Not all case laws, only few case laws you have to remember. 186.2 onwards will be your loans to direct, your intercorporate loans and advances. So what is covered here? Both private company and public company. Again, this is lender. Lender company can be both private and public. Can be both private and public. Second, what all is covered? Loan guarantee security investment, LGSI, loan guarantee security investment, LGSI, loan guarantee security investment. Mind you, in 185 it was loan guarantee security and book debt. In 185 it was loan guarantee security, book debt. But here it is loan guarantee security and investment. And to whom it is covered? One is body corporate, and then the person. They have included the word person. Person is an individual. So mind you, this will obviously exclude 185.1. Why 185.1? Those fellows are already prohibited. One thing we did not discuss, which we'll quickly see now, 185.3. That is also important. Quickly we will check that. One 185.3, there is an exemption. Loan given to managing director or whole time director. Mind you, only a loan. Guarantee security not covered. Loan given to managing director, whole time director is allowed, provided it is as per the scheme passed by the special resolution, or it is already included, in conditions of service. It is already included in conditions of service. Means what? When you are appointing him, in the appointment agreement itself it is included, then no problem. Or if there is a scheme where a special resolution is passed, then only loan given to MD, whole time director are covered. Correct? Then one more is the wholly owned subsidiary that I have already explained. Then one more is a finance company in the ordinary course of its business, if it gives out the loans, and this loan you have to maintain the government security rate. Your government security rate of interest, that has to be maintained at least. You cannot give interest free loans like that. So these two other things are there, but these two are important in the examination point of view, especially this. So this is a big exception. Generally you said loans cannot be given, but here we have said loan can be given only to two people, mind you, MD and whole time director, because they work full time in the company. Some benefit has to be given. That benefit should be clearly mentioned in the conditions of service, or that benefit should be passed as a scheme by passing a special resolution. This is the scene. Next, coming to these guys here, what is covered? Loan guarantee security, body corporate. So what did I say here? The body corporate point does not include, person does not include those covered under 185.1. Person does not include those covered under 185.1. Also, most important, in 2017-18 the questions came, if the company gives guarantee or security to a bank, bank in turn gives loan to the employee of the company, or company directly gives loan. Guarantee security are these 2 points. Loan is this point to the employee. Doesn't employee come under the word person? Answer was yes. But there was an MCA notification saying it is no. That MCA notification has now been made into a law. An explanation has been added saying that the loan to employee or guarantee security to employee is not covered under 186, which means employee loans are directly covered under 179.3T. Sorry, 3F. 179.3F. Because I told you the entire sequence. 185.1 employee is not covered. 185.2 employee is not covered. 185.3 employee is not covered. 186 also employee is not covered. So where will I go? 179.3F. So in the MCQ if they ask you employee loans are covered under dash, so I need to write 179.3F. Got it? 179.3F. Now the limits here are very simple. Up to 60% of paid up capital, free reserve, security premium account, nothing but in layman's language net worth of the company or shareholders funds. Up to 60% of PUC plus FR plus SP, or 100% of FR plus SP WIH, whichever is higher. Up to 60% of PUC plus FR plus SP, or 100% of FR plus SP, WIH, whichever is higher. So what resolution is needed? Board meeting resolution. So what resolution is needed? Board meeting resolution is needed. But if it is beyond that, then special resolution plus board meeting resolution. Special resolution plus board meeting resolution. But I mean, there is no time to discuss the logic, but this could be the structure, right? If the full structure we will draw in a while. Okay, I'll draw it in a while. I'll draw it because there is one more point to be discussed. Okay, this is the scene. Now the question is, there is one more question. If I have taken a loan, see, this is the company I'm talking about. Company is now giving loan guarantee security investment, that we have already seen. But if the company has taken a loan from a public financial institution, company has taken a loan from a public financial institution. Company has taken a loan. So the PFI has given a loan to the company. Company now wants to give LGSI to the persons involved or one more body corporate. This part 186 is there anyway, but I am saying I have taken a loan. Can I take a loan from somebody and give that money to somebody else? Obviously this fellow will not agree, right? I need to ask this person's permission. I have to ask this person's permission. Deepak is asking, Aline Matthews is asking, layers are only for 186. Layers of investment companies are 186. Subsidiary companies are covered in 287. So for those layers, you need to see this structure, guys. 287, 186, 89 and 90. 89 and 90 is SBO, significant, 90 especially significant beneficial owner. That's a different discussion. Wholly owned subsidiary is not considered in 186. We have not yet done that. We have only seen the 185 part. We have yet to come to 186. Companies can give loan guarantee security to employees. Yes, they can give under 179 3F. They can give under 179 3F. Bharti, I think today your internet is worse than mine. There is no buffering now. Yes, next. So 287, 186, 89, 90. Now, what I was telling here. So PFI is giving then loan to the company. PFI is giving loan to the company and company is giving to all people. Now, don't you think so I have to seek permission from this particular PFI? 100%. I have to take the permission from this particular PFI. But there is a small, relaxation. Relaxation is if, first of all, the company should be repaying the loan regularly on time. All EMIs they are paying. At least now till whatever EMIs are they paying. So first of all, there should be no default here. First of all, there should be no default. And whatever I am giving, loan guarantee giving, that should be less than 60 or 100%. That should be less than 60 or 100%. So if this is there only, the loan that I am giving is less than 60 or 100%. The loan guarantee security investment that I am giving is less than 60 or 100%. And there is no default in giving back the money, EMI, no default. Then only what will happen? The concept of PFI approval will not come. PFI approval will not come. PFI approval will not come. In all other cases, even if it is less than 60 or 100, but there is default in giving the loan, in repaying the loan, or if it is more than 60 or 100%, whether there is default or not, you require prior PFI approval. So what does it say? Very simple. Here, prior PFI approval is there. Board meeting resolution is there, and friends, in 186 unanimous approval is needed. Unanimous approval. Unanimous approval means what? Everybody in the particular meeting should say yes. Nobody should say no. Even if a person abstains from voting, it is as good as a no. This is a minor difference from this and 162. 162, the wordings were without any vote being cast against it. Which means if there are 10 people, 8 people say yes, 2 people don't say anything, then also it is a valid resolution because it is without any vote being cast against it. So technically 162 is not a unanimous resolution, but ICI uses it interchangeably. That's why you can take it as a unanimous resolution. But here this is the truest sense of the unanimous resolution, whereby whoever is attending the meeting should say yes. The ones who say no are the ones who don't say anything. Both are no only. If you don't say anything, that's as equal to no. So any people who abstain also will be taken as a no in this particular scenario, right? So prior PFI approval plus board meeting resolution plus unanimous approval. Less than 60 or 100%, same no PFI approval, BMR plus unanimous. More than 60 or 100%, prior PFI, and mind you, since it is exceeding 60 or 100%, in the last chart only we saw, you require prior special resolution. Then you need board meeting resolution plus unanimous approval plus MGT 14. MGT 14 is the form that you need to file within 30 days of the AGM. Sorry, 30 days of passing the resolution. 30 days of passing the resolution. Prior PFI plus prior special resolution plus board meeting resolution plus unanimous approval plus MGT 14. Same for this also. Both the things same. More than 60 or 100%, yes or no, both the things it's the same. Prior PFI, prior SR, BMR, unanimous and MGT 14, right? So this is what we need to keep in mind. Yes. So Ajay 162 general meeting unanimous. It's not unanimous as I told you already, but ICI uses interchangeably. Yes, that is by the shareholder, this is by the board. Done. This is fine. So if you see, these are all the various things of 186. Now in 186 we also need to understand the entire scheme of things. See how to compute the questions given in the exam when it comes to 186. 4 steps. Step number 1, I should compute the 60% or 100% limit. So take everything into account and first do 60% of net worth, PUC, FR, security premium, next to 100% of FR security premium, whichever is higher. So that one part you should take. Let us assume that comes up to 3 crore. Step number 2, you have to take LGSI that has already been made. Means whatever the loan, guarantee, security, investment that I have already made, that comes under step number 2. So this is 2 crore. Step number 1 is what? 60 or 100%. 60 or 100% is what? 3 crore. Step number 2 is LGSI already made, that comes up to 2 crore. Step number 3 is very simple, that is step number 1 minus step number 2. So this comes to 1 crore. Obviously, this is what? LGSI that still can be made. LGSI that still can be made, right? So first is what? 3 crore. Step 1, 60 or 100%, 3 crore. Next, LGSI during already that has been made is 2 crore. Just an example I am giving you. Step number 3 is step number 1 minus step number 2. So it is 3 minus 2, 1 crore. That is LGSI that still can be made. It is potentially I can still make up to 1 crore. Now step number 4 is the actual proposal. They would have given in the exam. The proposal would be what? The loan, guarantee, security, investment that still can be made now. That's the proposal. So this, if it is let's say 1.5 crore. If it is 1.5 crore, it is obviously more than step 3. So if step number 4 is more than step number 3, what to do? Second one, if step number 4 is less than step number 3, means now I am only want to invest around 80 lakh. Now 80 lakh is less than 1 crore. That is step number 3. No problem. Step number 4, in my example, in this example, 1.5 crore. 1.5 crore is more than 1 crore. So if it is less than the 1 crore, no tension. Then you will have to simply pass a board meeting resolution. But if it is beyond that limit, then obviously you have to pass a special resolution plus board meeting resolution. Special resolution plus board meeting resolution. Right? Prior SR means how can we take that approval? I will do this now here. I am seeing that the proposal that is coming is 1.5 crore. So I have to take, before I can even go ahead with the resolution, I have to take a prior special resolution. First call a general meeting, take a resolution. Can you tell a few lines about BMR and CR? Board meeting resolution should be discussed at the board meeting, across the table, sit face to face. Circular resolution is passed under 175, where the document is sent to each person's respective residences, and without any discussion, purely seeing the documentation, the director will vote yes or no. That is regarding circular resolution, right? Done. So this completes this. Now coming to the holding subsidiary relationship, interesting point. So holding company giving loan to a joint venture, similarly holding company giving loan to wholly owned subsidiary. Mind you, this was previously exempt under 185, remember? Exempt under 185. But 186 also, is it exempt or not, is the question. Is 186 also exempt or not is what we need to see. Mind you, 186 is not exempt, but special resolution is exempt. 186 is not exempt, but special resolution is exempt. Means what? If it goes beyond the limits, then no need to take special resolution. Simple board meeting resolution would be enough. Next, holding company giving guarantee security to anybody who in turn gives a loan to wholly owned subsidiary or joint venture is one part. Then holding company giving or investing in the securities of a wholly owned subsidiary. Both the cases. Mind you, if I already hold full equity shares, I will be called as a wholly owned subsidiary. But what is this securities? These extra securities will be your maybe debentures, bonds, mutual fund units, preference shares, other things. Wholly owned subsidiary means I hold 100% of your securities anyway. So if the holding company is giving guarantee or security to anyone who in turn gives the loan or anything to a wholly owned subsidiary or JV, similarly holding company invests in the securities or that is other than equity shares of a wholly owned subsidiary, mind you again, special resolution is exempt. Here also special resolution is exempt, here also special resolution is exempt. Special resolution is exempt, nothing else. Correct? Then third one, holding company giving guarantee or security to a bank or financial institution, which in turn gives a loan to a normal subsidiary, not a wholly owned subsidiary, normal subsidiary. This is exempt under 185. It was exempt under 185, but 186, full 186 will apply, including special resolution. So this is a very, very important chart to simplify the exemption. So all these, this was an exemption under 185, this was an exemption under 185, this was an exemption under 185, but under 186, these two, special resolution is exempt. Special resolution is exempt, but 186 very much applies. 186 very much applies, right? Yeah. So if you see, that's the thing. And anyway, they have to use it for, as Deepak says, yes, it has to be used for principal business activities, no doubt about it. It has to be used for principal business activities. Done. So now one more thing is there, friends. If this is the final chart that I want to do. So if you see here, share capital 100 lakhs, free reserves 100 lakhs, unsecured creditors 30 lakhs. So if you see how much can I give share capital plus free reserves, that is 200 lakhs. 60% of 200 lakhs, that is 120 lakhs, or 100 lakhs, whichever is higher. So basically 120 lakhs. Beyond 120 lakhs if I do, then I obviously have to pass a special resolution. Beyond 120 lakhs if I do, I have to obviously pass a special resolution. Why? Because up to 120 no problem. Only beyond 120 I have to pass special resolution. But the proposed loan now is 210 lakhs. Proposed loan is 210 lakhs. They generally will say, okay, it's more than 120, so I'll pass special resolution. But no. See here, special share capital and free reserves is 200 lakhs. This is the net worth. Now the company wants to lend money, which is 210 lakhs, more than the net worth. Can generally, if it is more than 120 lakhs in my example, shareholders approval is needed. But technically now, not only this 200, but I am also borrowing from unsecured creditors. I am using this money 10 lakhs. If you see mathematically, if I am giving a loan is an asset. And if it is 210 here, 200 I am drawing from here, 10 I am drawing from here. If 10 I am drawing from somewhere else, do you think shareholders have the right to give approval? No. That's why there is a very good MCA clarification which says any investment loan etc. beyond the net worth is not possible. So how do I do it? Up to 60%, 100% BMR. Beyond 60 or 100% up to the net worth. Prior special resolution plus BMR. More than the net worth I cannot do. Under 186 it will not allow me to pass special resolution also. So this is one important thing that we have to keep in mind. Correct? Done. So that completes the entire part of this 186. So 185, 186 done, friends. It is done. So let's now quickly go to 184 and try to complete as much as possible. Remaining part we'll have to do it tomorrow, no choice, because this is a huge thing, never ends actually. We'll go to 184 now quickly. Yeah, and this 186, one more thing, 186.11 does not apply to these companies: banking, insurance, housing finance, company engaged in financing industrial enterprises, then infrastructure facilities, and most importantly, it does not apply to investment in right shares. So if I invest in right shares, then it will not apply. Why? Because right shares is a benefit. Right shares is a benefit. So if I make an investment in right shares, then it will not apply. So for example, if I have already bought shares of 1 crore in Infosys, correct, this will be LGSI already made. Correct. Remember, step number 1, total LGSI 3 crore. Second, LGSI already made, let's say 2 crore. This 2 crore includes this 1 crore. Okay. LGSI that still can be made is 3 minus 2, 1 crore. This is LGSI that still can be made. LGSI that still can be made, that is 1 crore. Now the question is, today the company invests in 1 crore worth of right shares of Infosys. Right shares of Infosys. So will you take this into account? Answer is no, because investment in right shares is a benefit. So since full 186 will not apply, very clearly given, this section only will not apply to investment in right shares. So will you take that amount in that 186 calculation? Definitely not. Definitely not. Now one more thing is there, investment in securities of body corporate. That one point I'll have to quickly discuss. Investment in the securities of the body corporate. But just see this, it is interesting. What I should see in the exam is very simple. For 186 to apply, first of all, first column should be a company. Second, it should be security. Third one, it should be a body corporate. The wordings are also like that. Investment in the securities of a body corporate. If you remember, here, this one. Investment in securities of a body corporate. So to see whether the investment will come or not, I should see this clearly. Investment in the securities of a body corporate. So first of all, as I told you, first should be a company. Second, it must be a security. Third one, it must be a body corporate. If all the three is a tick, then 186 will apply. Otherwise, 186 will not apply. So if you see left hand column, if you keep seeing, Infosys is a company, Wipro is a company, Tesla is not a company, Tesla is a body corporate. So basically this one is outside the purview. X Limited is a company, partnership firm is not a company, right? X Limited again is a company, Z Private Limited, J Private Limited, I Limited, P Limited, all these are companies. J Limited is also a company. So basically all these things are covered. Next, security. Security means what? It is as given by the SCRA, Securities Contract Regulation Act. That has everything. Your equity shares, preferences, everything is there. So first is what, friends? Equity shares is a security. Indian depository receipt, security. American depository receipt, security. Capital. If X Limited is investing in the capital of some partnership firm, capital money is not a security. So that gone. Equity share capital is a, security. Mutual fund, security. Debenture, derivative, everything is security. Equity share capital, GSEC, security receipt, everything is a security. Everything is a security. Third one, body corporate. Wipro is a company. It's a body corporate. Tesla, mind you, Tesla is not a company, but Tesla is a body corporate. If you see body corporate definition, it says includes foreign company. Infosys, it may be a company, but if you see first only was Tesla, so if it's the entire item, it will not apply. Second and third was a tick, but first one was Tesla, hence it will not apply. So here capital of Y and company partnership firm, correct? Capital of Y and company partnership firm. So for this, I am just investing the funds of the company. Hence, I will have to go to 179.3. 179.3. So there are residuary sections in 179, guys, especially 179.3, D, E, F. D is about borrowing. E is investing funds. F is granting loan. This you have already discussed now, remember? This you have already seen. This is granting loan. First I'll have to go to 185.1, then I have to go to 185.2, then 185.3, then 186. If nothing works, only then I come here. 179.3F. Correct? That was regarding granting loan. But if I'm investing in the securities of body corporate, I'll go to 186. If it is any other investment, I'll come under 179.3. 179.3. Similarly, borrowing. If I am borrowing money just like that, 179.3D. If I am borrowing beyond the net worth, not lending, borrowing beyond the net worth, long-term loans if I am borrowing, this I will go to 181C. I will go to 181C. So this 181C is different, 179.3D is different, right? 181C is different and 179.3D, 179.3D is also different. So you need to keep that in mind, right? So that's what I am trying to tell. These are different. If step 4 is less than step 3, is BMR required? Yes, BMR is definitely required because we are talking about 186 here. It's not about 179.3D. BMR is needed. 185 chart, Mayur, you can again go back to the first slide and see everything, man. It's coming properly. You can go see there. Everything is given there. JV no SR for subsidiary, SR why so, sir? Ajay, I didn't understand your question. What is this? For JV no SR. For subsidiary, JV also it's there. Only for normal subsidiary. Wholly owned subsidiary and JV are together. I think that's what you are asking. Wholly owned subsidiary and JV are together. Normal subsidiary is different. Okay. So normal subsidiary is where more than 50%, but a JV it is more than your 20%. It's like an associate. Because if you see the definition also, it says the joint venture includes, associate includes a joint venture. You see 2 clause 6 definition. It includes a joint venture. Even in the 129.3, which speaks about consolidation, there also it says includes a joint venture. So because of that, their linkage, wholly owned subsidiary and normal associate, they are taking together. That is joint venture. Whereas normal subsidiary, they say special resolution is not exempt there, because you have to follow all the provisions. Because the companies, what they were doing, they were having many subsidiaries and it was very difficult to track the money. That is the intention. For that, as I told you, if you attend my regular class, you will understand. You have to understand 2 clause 87, 186.1, then 89, 90. Read with 164, disqualification, your not filing the returns. That has to be linked with dormant company. All those things are there. Let you leave for the exam and all, it's not needed. Okay. 179.3 DEF can be done with omnibus approval. So that is a totally different concept, man. Omnibus approval. Omnibus approval is only there in 188. So in 188 linked with these sections, yes. Otherwise, no. 179.3D, I will have not done it. You can check the 1-day marathon video. Go to Advait Learning channel. Go to my 1-day marathon video. Check the description. I have given the direct link to the 1-day marathon video. There you see the timestamp. In the timestamp, I have explained 186 and 179. Go there and find out. So it's very difficult to cover everything, friends. So that's why I am giving you an option also. Correct? I am not saying only this much I will teach. For the remaining, buy. You have to pay money. Some people tell no. First they will tell free. You will all come. You will all think, okay, this fellow is giving free. Then I will stop the lecture and tell, now if I want to continue the lecture, pay. I am not like that. I am telling you there is an option. Go to the description. The description, I have given a 1-day marathon revision. That is 9.5 hours of in-depth company law. I mean, they're not full in-depth, which I do in regular class, but good enough for this exam. July exam, all amendments are covered. Please go there. Okay. FEMA and all for paper 4 marks will come. Don't take tension. In 6D, 20-25 marks will come. In this paper 4, only 4 marks. So I'll just quickly browse through and I'm revising. There is no such video for FEMA. I don't know. Just check my channel. See the playlist. It will be there. Okay. Yes. Ajay, 163 director not removed under 160. Any logic? Yesterday only I explained the logic, because if you remove that person, then what's the point of protecting the minorities? That is the reason. Fine, friends. So this is regarding the entire thing. So I don't think so we should start 184, because once I start it will take some time and it's easy to link between 184 and 188. So tomorrow what we'll do 184 and 188 and we'll finish it probably in 1 hour time. In the remaining hour we'll have to do the MD provisions. As for the schedule, MD provisions is there, but I knew this would not be over in one day. So many provisions are there, no? That's the reason. Correct? Alright. So I think that is done for the day. Tomorrow's agenda 184, 188 and MD provisions. We'll see even board meeting provisions here and there. We'll try to mix everything. Today I anyway did the quorum provisions. If possible we'll do, because the schedule is tight. So as much as possible we'll try to do. Okay. So with that, then we have to investigation and inspection also quickly we need to see. I'll only be doing the chart. Alright. Alright guys. Ashish Kumar Mohanty for PDF, Telegram and all, see the description. On that note, see you. Good night. Shubham, Siddesh, Ashish, Kritika, Kavita, thank you for coming. Ajay, Ashoka, Kumar, see you tomorrow. Thank you so much. I glad it was helpful. See you tomorrow guys. Bye. See you.